All right, 6:57. You know, we're all a little guilty of spending a little too much over the holidays, and now that season is behind us. It's time for us to start paying back those holiday credit cards. So in this morning's PIX 11 Financial Fix, we have the 5 best and worst ways to pay off debt. Financial advisor Ken Mahoney is here to walk us through it all. Ken, nice to have you. All right, so nearly a quarter of all Americans go into debt during the holidays. That sounds like a huge number.
Scary.
Yeah. So how do we go? How do we pay off debt?
Well, here's the problem. You pay the minimum payments. I ran some numbers this morning.
Okay.
$2,000 credit limit, right?
Yep.
7%. You pay the minimum payment every month. Guess what? It takes you 10 years to pay that down.
10 years.
So you forgot what you even paid for. Like, what's it that you even bought? It takes you 10 years. So the Credit Card Act of 2009 says a little number in your credit card. What's the amount you need to pay it off to zero after 3 years? So that's your starting point. Usually double the amount, at least more than double the amount in minimum payment. Okay. Because minimum payment, you're not really getting anywhere. That's a problem.
So go back to that strategy again. What's the minimum? How do we calculate that again?
So the minimum, basically, they're going to show you on a credit card. It's going to take 10 years to pay it off. Wow. Okay, but there's another number that's on there that says, hey, it'll take 3 years to pay it off down to zero. What is that minimum number? It's usually double the minimum amount you need to pay. Now,
should you focus on paying off the largest balance first? Because a lot of people have different credit cards, so how do we combine it all?
I know, but you know what? Sometimes it feels better. Let's say you have 4 or 5 credit cards. Pay the smallest one off first, okay, and then you knock it down to 3 or 2. So I would say the one with the smallest balance, let's say it's $400, knock that out. It feels like a sense of accomplishment.
A lot of people say it might be a good time to go take extreme measures out, go into your home equity, dip into your 401k. No, don't do any of that stuff.
An accountant would say, hey, you know what? You can write off that credit on the equity line. Not a good idea. It's a vicious cycle of actually getting credit card debt and keep finding ways to pay out of it. Not a good way to do that.
And what about switching balances from card to card and 0% interest rates?
We can do that. That makes sense. Yeah. So if you have a 15% or 12% and there's 0% offer, go for the 0% and start knocking that down aggressively.
And I think the bottom line really is to start now for next year. Yes. Start saving now for next year so you don't get into a financial hole.
And next year, use cash. Use 20s and 50s and don't use our credit card because we lose track of what we're spending.
Exactly.
But with cash, you know, you have to register 20s and 50s. It hurts a lot.
It hurts a lot. Financial advisor Ken Mahoney for coming in. Thank you so much for those helpful tips. And I'll be looking on that little payoff debt, the second one. And we'll make sure to post all the tips that he just gave in our PIX 11 News app. Time right now is 7 o'clock. The news starts right now.